Good afternoon, ladies and gentlemen. This is Brad Matheny. I thought I'd put together a quick little video after today's big Fed day and rollover in the markets. Now, you must understand that the Fed has taken aggressive action over the past week and a half to try to stave off a banking crisis while also potentially supporting global markets with the intent still to deflate the inflation trends, moving inflation back down below 2%. We're in a move which, in my opinion, is very similar to the early stages of 2003, 2004, and 2005, with a bit of late stage rate adjustment. But what I do believe is going to happen is that the U.S. markets are going to continue to be aggressively pursued by foreign traders while they're searching for safety away from global risk. I believe that gold will continue to rally, as we saw today. I believe silver will lag, but will continue to rally. And I believe generally the U.S. stock market is going to continue to melt upward. And it's hard to understand why would the market move upward in such a late stage Fed move. Well, it's very simple. Across the globe, you're looking at strength and economic capability with regards to growth opportunity. The U.S. is still the strongest, most efficient market on the planet, and because of that, we have a very broad, expansive recovery phase once we move past what the Fed is taking care of right now. Think of it this way. Once we get down to the post-inflation trend, if you were to think of which economies are going to be the most likely to rebound the quickest and avoid maximum risk, I would believe that the U.S. economy is the strongest, most efficient economy on the planet. Now, you could argue that Asia or India or what have you may come and grow a bit faster than the U.S. Well, yes, you could say that, okay, and you could argue that very efficiently that possibly India, the economy of India could grow faster than the U.S. for a period of time. I don't doubt that, but on a global scale, is India comparable to the U.S. in regards to economic capacity, consumer capacity, growth capacity, and corporate growth capacity? I think the argument would be that India in its own right is strong and possibly has great growth opportunity, but I think it's comparing apples to oranges, really. So let's get into it here and talk about some things. So the SPY, this is a weekly SPY system with my Fibonacci modeling system, and we're still talking about this 430, 435 area. We will, as we move forward, try to attempt to get above 403, 404, and then eventually 410. Actually, we've got a number here at 407.49, which is our current upside trending trigger. Actually, it's right down here at 401.48. roughly. Once we get above that number, we're cleanly above a bullish trigger level, and my expectations are that the SPY is going to move up into this 430, 435 area, stall out, roll back downward, and then roll back to the upside. I think I drew this out a little bit ago, indicating that if we did see a downside move, it would likely hold above this level and attempt to find a base, move into a sideways move. But in reality, ladies and gentlemen, I'm really looking at the SPY staying kind of in this range over the next 15 months or so. So we're going to be fairly sideways, but reflating, I believe, into the end of this year. Now, what I wanted to point out as well is the SPY cycle patterns have moved into a bullish biasing mode. So we're long-term trend, we're still bearish. We haven't moved out of this bearish trending mode. Price action it was congestive, now it's explosive today. Sorry, yesterday. Yesterday was a topping pattern. Today was a flat down day. Tomorrow is a breakaway day, which I believe will be to the upside, and Friday will be a rally day, which I will believe to be the upside. And then on the following week, we have a breakdown, which I believe Monday will likely move lower. And then Tuesday will be a momentum rally. That'll be higher. Wednesday will be a gap up lower bar, very similar to what we had right back here on Monday. Gap up lower bar means that we're going to see a carryover of the momentum rally in the overseas markets. It'll open up above the previous day's close and then kind of stall out and roll downward a little bit. Thursday is a top pattern. I interpret this as attempting to set up a price peak, meaning that we could see higher movement or retesting of previous peaks. And then Friday we have a gap potential. And given the fact that we're in an uptrend, I'm going to have to kind of wait and see what this setup looks like next week to determine where I believe the gap is going to occur. A gap potential means that we're likely going to have an opening price gap. I just don't know if it's going to be to the upside or the downside yet, but it's likely going to happen on Friday. Then, of course, on April 1st, we have our top resistance, which tells us that we're setting up a major resistance. So if we take a look at this, kind of see where we're at here, we have breakaway, rally, breakdown, momentum rally, gap up, top, and then gap potential, and then top resistance. That would mean to me that we're going to move into a scenario where the S&P by the end, the SPY by the end of next week, I would very strongly suspect that we're going to be possibly up in the 412 to 416 area by the end of next week, maybe by April 2nd or 3rd. That would put us on a fairly strong rally phase up into the end of April, somewhere back over here around April 20th, April 25th. And that means that we're going to be likely seeing some very strong upward trending. Now, when we consider what's actually taking place in the market from a valuation standpoint, we are establishing an early stage base in the market. You can see the basing coming down in here, stalling, dancing around these lows, moving back to the upside. We're setting up into an early stage base. And what happens in an early stage basing pattern is you start to get some initial moves to the upside. It's not really the greatest time to be jumping into trends, but there are still some really good opportunities for traders out there short term. I'm going to highlight some of them as we go forward. But this early basing stage could last, as you saw back over here in 2018, could last essentially 12, 14 months before we get into some sort of a real strong reflation trade. So understand that we may have about 12, 14, 15 months of basing and bottoming, which means we're looking for shorter term signals and really looking to reposition between now and, say, July of 2023 for what's coming next, which would likely again be, come back over to this chart, likely be, as I've drawn it out before, a rotation back down here into June, July, followed by a rally phase into August, September, October, November. If I could continue this, let me drag this over here and drag this over here. Let's get the top. Give you a real feel for what's going on. At this point, we're going to be nearing the end of the year. We may see a little move up above the previous high back over here towards the early portion of 2024 into Q1 2024. Then I believe we're going to roll back down, establish a real wave 2 correction, come back down into this area probably by June, July, then roll back up and get into the election, which will move us into a sideways. Sorry, the election is going to be right in here. Move us into a sideways pattern just before the election. And then depending on the election and what takes place around November 2024, I believe we will likely see some sort of an extended move back to the upside. And this would actually start, where is it? There it is. This would actually start wave 3. Whereas this would be wave 2. and this is currently wave 1. So we have a scenario here where we will be looking at wave 2 establishing somewhere in February, probably March 2024, basing around July 2024, moving up to a sideways stance back over here, and understand that the reality of that move is that we're going to move kind of right into this mode prior to the elections. Again, this is just fairly common sense with regards to the markets. And then after we get some clarity with the election, we'll likely move into some sort of a grind higher, which will establish a broader wave 3. Okay, so now let's come back over here and take a look at the MENT Live Trades. I was quite impressed recently with the pure alpha trades. I'm looking at the 2x bullish ETFs in pure alpha mode. Let me explain how you do that. When you come to my website and you enter the expert growth membership area, on the menu is a thing called live trades, which are my daily swing trading algos. And once you're in live trades, you have all of these setups. But hypothetically, looking at these bullish ETF setups, if I click on the 2x bullish ETF standard model, which is right here, 2x bullish, then I click on pure alpha, which highlights the pure alpha trades. Take a look at what we've got going on here. So we've got AGQ took a trigger 2 days ago. It's fairly flat. It's off 0.0199%. We have seen it perform fairly well, okay? But this is an early trigger. Boyle took a trigger just a couple of days, yesterday actually. It's off 5.19%. It's a short trigger. This is Boyle, you can see, moves quite a bit. It's won 4 of the last 6 trades. It's got some pretty heavy volatility. But again, this is off 5.19%. This would be basically 1/10 of your portfolio. So this would be 0.5% total of your portfolio of the amount that you're trading. DGP took a trade about a week ago. It's up 7.54%. EET went flat on the 17th. Last trade, well, this year so far is doing pretty good, 13.67%. FNGO took a trade yesterday and is up 8.48%. What a great little trade. And of course, it's only a $23 ETF, so this is a nice move. QLD took a trade today. As of the end of trading today, it is long. We are currently, actually, this is as of yesterday. And we are flat in the position. You can see we've won 4 of the last 6 trades. SPUU is flat on the 16th. SSO is flat on the 14th. UCC is flat on the 21st. Looks like it took a winning trade here just recently, maybe 5.68%. UGE was flat on the 16th. And again, look at these numbers. These are pretty solid numbers. You know, I mean, very easy to find trades over here. UGL went long about a week ago. We're up 4.11% on the trade. CHAU took a trade about 3 weeks ago. We're off 1%. XPP took a trade about 2 weeks ago. We're off 6.82%. Remember, you wouldn't be trading 100% of your capital in every single one of these. You'd break it down, and if you're following my recommendation, you'd be only trading 25% of your capital right now, and then taking that 25% of your capital and breaking them into 10 to 15 separate trading slots. So still impressive. Now let's go back over here and I'll show you how to take a look at the foreigns. And this is what I love looking at. Foreign markets tend to do very well, especially the ETFs. So this is the rotation. Let's take a look at Pure Alpha, see what Pure Alpha's got. Pure Alpha EFV is set up a trade about a week and a half ago, off 0.28%. FLYD took a trade at about a week ago. It's up 1.27. And EURL took a trade about a week and a half ago. It's off 4.77%. Now let's come over here and take a look at the the rotational or the the rotational modeling system, and FLYD still got that 1.27. MEXX is off 8%. BRZU is up 13%, been in a trade for about a month and a half. CQQQ is up 5.52%. EDC is up 15.45%, been in a trade about a month and a half. EDZ has been up 13.13%, been in a trade about a month and a half. EFA is up 1.2%, been in a trade about a month. EFGs is off 0.71, been in a trade for about a month. EURL is off 4.77%, been in a trade for about a week and a half, maybe 2 weeks. IDEV is up 1.59, been in a trade for about a month. IDV is up 3.55%, been in a trade for about a month. IEFA is up 1.44%, been in a trade for about a month. INDL is up 17.68%, been in a trade since December 16th, 2022. KORU is up 12.43%, been in a trade since February 16th, so a little over a month. PID is up 3.23%, been in a trade for about a month. SCHF is up 1.51%, been in a trade for about a month. SCZ is up 3.07%, been in a trade for a month. SPDW is up 1.11%, been in a trade for the last month. VEA is up 1.97, been in a trade for a month. VSS is up 1.44, been in a trade for a month. VWO is up 3.97, been in a trade for a little over a month. Yang is up 16.97. Now, Yang and Yen can move quite excessively. So be aware that these can be really strong or really difficult to trade. But still, it's been in a trade for a little over a month. It's up 16%. And Yen has been in a trade for a little over 5 weeks, and it's up 26.94%. Now, you got to look at these numbers. Like I said, the idea here is that you can come in and use pure alpha to find resources very easily. In fact, let's go over here and check out the core ETFs, see if there's any new pure alpha trades. Yep, ARKW, pure alpha long, generated today. GDX, pure alpha long, generated on 3/17. QLD, pure alpha long, generated yesterday. SOXL, pure alpha long, generated yesterday, up 0.06. UGL, pure alpha long, generated about a week ago, up 4.11. XOP, short, about 2 weeks ago, off 2.80%. And ARKQ was generated a trade, a short trigger, about 2 weeks ago, and is off 4.31%. Now, the pure alpha trades are highly ranked trades, so pay attention. They will likely provide very solid opportunity for you going forward, okay? Come over to MENT.com, check out what I do, and remember, the markets are digesting in this upward trend. I believe that we're setting up a wave 1, moving here, A, B, C, which will be extended into 2026 or 27, and then we'll get a D and then an E, potentially setting up a peak around 2030, 2032, somewhere around that time frame. But don't let the markets freak out or freak you out with everybody thinking you're going to see this huge market downward trend. It could happen, and I'll let you know when it happens, if it happens, but I believe the U.S. markets are moving quite strong. I believe the world understands that we are in a detrending mode, kind of a deflationary mode, and the U.S. market is still the best market on the planet to see future growth and future opportunity. So remember, we've got this next move here. We've got to move up to around 410 to 425, maybe a little higher. Then we've got some stalling, may end up back around the 400 area. Then we've got this next big move here, and this is where the real opportunity is. From about July 2023 all the way into February, March 2024, or January, February, March 2024. That's going to be the next big rally that we need to prepare for. Okay? And like I said, it's likely coming partly because it's a presidential election year, partly because global central banks don't want everything to unwind, partly, again, because the settling of the inflationary trends continue to mitigate risks. So when you think about these banking issues and other things that have taken place over the last couple of weeks, understand that those are functional economic functions that need to process. It's the best way to put it. Okay, guys, talk to you soon.